So, a warm welcome everyone to today's episode of Philosophy Culture. This will be our first episode of the investment quarter, right?
Yes,
Uh,
sir.
and I'm here as always, as you know already, with my bro Emils. What's up, man?
What's up, man?
Awesome.
And I'm here with my broadcasting.
Yeah. All right. And so today we will talk about, we'll simply talk about stocks or shares. And what else in this?
Yeah, just basically go through them, what they are, how they end up on the stock exchange, and how it works when we buy and sell them. So, hey, check it out.
Check it out. Yeah. Okay. So, how do you very feel about this episode?
Uh,
I feel
I very feel that this episode is gonna be us. I don't know, just trying to grapple with. I think grapple is a good word to use with
Mhm.
the whole stock concept.
Mhm. Mhm.
Uh, of course, we know some things about it, but yeah, to me, it has always like seemed a bit abstract. So yeah, I'm excited to have this discussion with you to
Yeah.
maybe make more sense out of it, and yeah, maybe even make the whole concept make sense for other people as well who are as confused as I was or am. So yeah,
I mean, there is a lot to learn about this whole stock concept, stock market. There is an infinite amount to learn about the stock market and stocks and shares and bonds and uh, index funds and all kind of stuff. Yeah, I
yeah.
think I
Which
think
we will like. Oh, sorry. Go.
no, go ahead, go ahead.
No.
No, but no. I was just gonna say that there's a lot to learn about it, so I think everyone has to learn something. But yeah, we'll try to break it down and be simultaneously as brief as possible, right? Because we don't want to overcomplicate things. Um, and this will also work as a sort of introduction episode to our investment quarter,
Yeah.
so to say. So I think it will be interesting.
Yeah, me too. I'm really excited about this quarter, about
Yeah,
these investment topics we have planned. So yeah.
cool.
Yeah. All right. So, shall we just jump in to the discussion with the classic question, right?
Yeah, I think we actually answered it, right? Didn't we? Sort of. Like, why do we find stocks important? Or I
Well,
mean, we
well,
could
I
maybe,
well, I said I kind of find this thing a bit confusing at times, like a bit abstract. But yeah, so I think a short and sweet answer to the question is that stocks and investing is um, a available way for the average Joe, as
yeah,
myself, to maybe figure out how to some sort of strategy and way to yeah, build some wealth. So yeah.
yeah. I mean, the thing is that the topic is kind of abstract, right? And you can't actually hold a stock or a share in your hands. Or maybe you can in form of paper, but that would still not be like a part of the of the actual company, right? Um, like if you think about it, it's kind of impossible to hold a part of the company in your hand. Uh,
Yeah, yeah, that's
so,
true. That's true.
so the whole thing is kind of abstract and it is tricky, and there is a lot of things to learn about it. But yeah,
Yeah. When you said, yeah, that you can't, you know, hold a company, like a piece of company in your hand. I was thinking about David Sandra. It was some podcast that he yeah was doing, and he said that like basically what a company is just groups of people, right? So it's to even like boil it down even further, it's just a group of people doing like something to provide a service or a product for the rest of the society. So
I mean, that's true. Like when yeah, when you break it down the way you do it, yeah, it makes sense because a company wouldn't work without people. Uh, so
so
yeah,
yeah.
cool. But shall we define stock or a share? Shall we define it first and then
Yeah,
come?
I think that's a good way to yeah.
Yeah. So basically, it's a piece of a company.
Yeah, a piece of equity, right?
Exactly. Yeah. Yeah. So when you own a stock or you basically own a piece of a company. Um, that's very basic. That's a very basic explanation. Um,
Yeah. And okay, okay, we have that. How would you further like explain the investing process? Like when or I don't know the right way to go about this actually.
I mean, I think we could go from like maybe two perspectives. So from the private, like the individual itself, like you and I, or we could go from the company perspective, why they choose to go public, for example.
Yeah, yeah, yeah.
Um, so yeah, as you choose. I'm not a professional in this either. So I just yeah.
Yeah, but like yeah, you know more than me, so I will let you take the lead.
Okay. We will try to break it down together. So
Yeah, of course,
yeah,
of course.
yeah.
But okay, so a piece of a company.
Yeah.
I think maybe we can jump. We can like take it from the company's perspective,
Hmm.
maybe why
Yeah.
they would like to like sell some as like a part of their equity to the masses.
Yeah. Like to
So
investors.
to
Yeah.
speak. Yeah, investors. Yeah,
Yeah. Well, I think there are companies that already in the beginning are sort of, when they are established, they are going public directly. And that's just to uh to sort of gather um gather funds and capital from the outside or from other investors, which could help them sort of grow. And yeah, I don't know if you've. I think Shark Tank is a great example. When it comes to uh, sort of a part of a company. When they are going to the sort of show when they are offering,
stocks.
yeah, a part of the company, like 20%,
Yeah.
uh, 30, or whatever it could be. Um, but yeah, that's from the yeah, that is actually from the company in company perspective. Uh,
Hmm.
But yeah, so basically, yeah, I would say that they are doing that. They are going public most of the time just to, gather more funds, to, I don't know, make some investments, or pay off some debt. Debt, I always say B. So pay off some debt, and yeah, just gather money for whatever reason it could be,
Yeah. I
or
have
to
actually.
expand. Yeah.
Yeah. I have actually like this question as a like I have like notes on it. So
Mm-hmm.
I have like basically mentioned all the points I have. So what I have written down is reasons why corporations sell stock include raising capital, developing a new product, growing a business, and paying off debt. So
Yeah.
voila.
Voilà. Yeah. So yeah, that would be the answer from that sort of that perspective.
Yeah,
And then
and then
yeah, go ahead.
no, no, no.
No,
Go
no, no,
ahead.
please, please, please. I think we were on the same point. Say it.
No, I was just gonna jump into some advantages and disadvantages, like from a company's perspective.
Hmm.
So yeah. So what would some advantages be for a company to sell some equity, right? Some stock. So the three advantages I have written down is capital infusion, which basically means they are raising more capital for their whole operation within the company, right? And number two is access to expertise, which was interesting. So when new individual investors acquire shares, they often bring their expertise, industry knowledge, and business connections alongside their money, is what I have written down. Yeah, any comments on that?
I think if you look at it, well, the last point that you mentioned,
Yeah,
I think it could be sort of frustrating, especially if you look at bigger companies and when you see that there are like thousands or like hundred thousands of people owning owning
yeah, only.
stocks and have invested their money in the company, and they don't always come with like. So if I own like two shares in a company, they won't send me an SMS asking me like, yeah, well, how should we continue with our operation and so on. But I think this is more applicable to like bigger investors that are like buying 20, 30, like 10% of a company. Um, and that could, yeah, obviously uh, uh, come with a lot of knowledge. And then there are actually companies that are selling their entire stock to a bigger company. Uh,
Wow,
and that's where they get all the knowledge and resources from eventually.
for sure. Yeah. Um, but like even if you are like a smaller investor in the company, like let's say
Yeah.
you buy like maybe more than two stocks, but let's say you buy like I don't know, 100.
Yeah.
I think I read somewhere that a advantage or like some you have like you can vote right for some certain decisions. You can have like gain some sort of voting power if you own some equity in a
Yeah.
company. So I think that's something to bring up as well. That
And
maybe
that's
that like maybe you aren't like maybe called to come to the shareholder meeting, all right, to discuss some major decisions, but maybe you can have some influence
yeah.
by voting.
And I think the difference is that, some shares are yeah, A or B shares. So I think if you invest or like if you own A shares, you you can actually you get some voting power, right? Compared to when you own B shares, if I'm not mistaken. Um,
All right.
so yeah, I think it could also, yeah. I think it depends on that as well.
Maybe we
Uh,
should do like a separate episode on different kinds of shares because I think there are like
yeah, I mean that could be an idea to make a separate episodes on that and sort of try to relate it, or maybe not relate it, but maybe look into some companies that actually offer A and B shares just to see how, just to come up with some examples as well.
yeah. And I was thinking maybe I'm like confusing some stuff or like mixing up some stuff.
Yeah.
But like, aren't there like a large cap, small cap, like some medium cap? No, isn't I think I've seen it somewhere, but I'm not sure.
Well, let's see. Yeah, but anyway, I'll try to check it up. But as I know it, you have like A shares, which give you more voting rights, B shares, and then you have also preferred shares, which basically you will get the dividend payout first, before the other ones get it.
Right.
So you are more, yeah, if we try to connect it with the name, you are more preferred to get the dividend payout.
Right.
Yeah.
You have some sort of privilege,
Yeah,
basically.
exactly.
Yeah. Okay. Dividend privilege.
Yeah.
Yeah. All right. All right. All right. And then my third point, as a advantage for companies to sell their shares, is that they get enhanced reputation. So a successful sale of company shares can enhance a company's reputation and market credibility. It demonstrates investor confidence in the company's growth prospects and can attract more attention from potential customers, partners, and even further investors.
Yeah. Yeah. I mean, yeah, it makes sense.
So yeah, yeah. And then I can briefly mention some disadvantages.
Yeah.
So one is a loss of control, which we kind of mentioned, or I don't know if we actually did, but like, yeah, if you sell off too much of your equity, like let's say I own 100% and I sell off like 60% to someone else, they basically have the they own like the bigger part of the company and have um as a result more like control and yeah, a bigger say so.
That depends if you sell it to an individual, right? So if you sell it to just a simple individual, like to one person, then that person will have more control. But you could also sell it to several persons.
Yeah, and how would that turn out? Like, wouldn't there be like you? I assume you would still have like some people who own more than others, right? So would they like become like some sort of chairman or like I
Not
don't know.
necessarily. They could also be there as investors. And so, for example, let's say that you have a company and you sell 60% of your stock value, or like your stock to to a person, to just one individual. Then that guy will be basically the majority owner in the company, right?
Yeah.
However, if you sell it to, let's say, two persons, then it will be shared. So you will have 40%, and the other ones will have 30% each. So you will still be the majority owner.
Right.
Um, and when it comes to all those positions like CEO and vice chairman and board of directors and all that stuff, it obviously depends how big the company is, and yeah, how many are involved in the business.
Right. 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 And like committees, where do they come in the picture?
Committees.
Because I assume like maybe there are like like
How would you call, how would you define a committee? Committee.
committee. It's a
Are you referring to the board of directors?
well, yeah, like
Yeah.
maybe. But yeah, I was thinking like this, like this picture of a bunch of people in suits sitting around the round table discussing something important. So that's kind of my mental image of a committee.
Yeah. Yeah, I would, yeah, depends on, I mean, there
But
could be several people around the the company sitting around the table and deciding stuff. But I would say that maybe you're referring to the board of directors, which are
may
basically, yeah, uh, which are basically making decisions. Uh, yeah, making decisions when it comes to the company
Right,
alongside the CEO as well.
right,
But I would put the board of directors as the top and then the CEO, because it's usually so that the board of directors are actually choosing the CEO.
right.
So
Yeah,
yeah.
okay. And yeah, I assume there are like uh plenty of like how do you say it? Uh Plenty of type of committees, like committees that
Yeah.
like decide like different things in company. Like yeah, but
I mean, if yeah, I think that if you're looking at multinational enterprises, or like, let's say, conglomerates, or we had a good example, LVMH, right? Louis Vuitton, White Hennessy, or the other way around. Well, anyway, they have like they have if you look at their structure, they have like a lot of subsidiaries, and then they have a holding company, and yeah, it's a more complicated structure compared to the like, if you compare it to a sort of company that only has like 3 employees.
right,
um but there you obviously need more committees, I guess, and yeah, you will have several other CEOs that are reporting to one CEO, which is further reporting to the board of directors. um yeah,
interesting. Okay, okay.
yeah,
Um, yeah. Should I continue with my disadvantages?
yeah, continue. Yeah.
Okay, so number two. So number one was loss of control. Number two is disclosure of requirements. So you are like um, the company is like watch out. Damn, my English sucks today. It is demanded of the company to like provide details of like financial information, business business strategies, and the potential risks to shareholder and the regulatory authorities.
Mm,
Interesting. Then number three is shareholder expectations. So yeah, um, when new investors come on board, they can bring a broader range of expectations varying the company's performance, debt capital, and returns on investment. Then four is dilution of ownership, which we have kind of covered.
mm,
Um, yeah, yeah.
mm. Yeah, that's interesting.
What are you thinking about which point?
No, I was just thinking like about all of them sort of
Okay.
together.
Okay.
Yeah, yeah, yeah. But no, when it comes to, could I add something about large caps, medium caps, and small caps?
Yeah, for
Yeah.
sure.
Just to get back to it. So when it comes to small caps versus large caps, this is what I found according to Investopedia.
Yeah.
Uh, but basically, large caps tend to be more mature companies, so those are like bigger corporations,
Right.
uh, and are less volatile during rough markets as investors fly to quality and become more risk adverse. Shares of small caps and mid caps may be more affordable for investors than large caps. Yeah.
Right.
But smaller stocks also tend to have greater price volatility. Yeah. When it comes to price volatility, I think it depends. Uh, uh, I think it depends on the yeah, it depends on a lot of different factors. But I think, yeah, maybe the bigger ones are more stable indeed. Yeah, go ahead.
What do you mean by price volatility?
It's like the stock price is like fluctuating a lot.
Okay,
Mm.
I just wanted to make sure because I actually have some notes regarding
Yeah,
that. Yeah. Go ahead.
yeah. No, but I think I said what I had to say about it. But yeah, I think it depends a lot on the different markets and other factors.
Right.
and of course a lot of decisions as well. So yeah.
Yeah, well, that is why the stock market is what you call it, unpredictable, right?
Yeah,
That's why you can't really ever 100% predict like what's going to happen next.
exactly. Even
But
though according to Warren Buffett, sorry for interrupting you, even though according to Warren Buffett, the history is kind of repeating itself, right? So you could somehow know what to expect from the stocks, even though it's not 100% guaranteed. But if you look, for example, how stocks react after a crisis, or
right.
how the purchasing power is over time, or I don't know.
Yeah, yeah.
Yeah, I think you know where
And
I'm
that,
going. Yeah,
that's a really good point. Yeah, but yeah, you have to be a pretty knowledgeable human being for that, or for damn, my English is so off today. Yeah, for to getting to that point, right? That you can like
yeah, yeah,
almost see what the odds are of things happening. And yeah, I think Charlie Munger even said like, yeah, how doesn't matter how smart you are, you will still like commit these stupid mistakes. And like yeah, I think if you know a lot about like human nature, like how people like almost always act in a cohesion with like each other, right? Like we are so influenced by the uh group mentality, I assume. Like yeah, you want to fit in, and like yeah. So that's interesting. That's really interesting. Some other points like I have regarding this issue, like issue, a question, is so yeah. So my question is like, what causes stocks to fluctuate in value? So which is basically what you said with the price value, right?
yeah. And that some
So
people tend to, yeah, sorry, and that, yeah, when there are more people selling the stock tends to, um, the stock price tends to depreciate. Meanwhile, when there are a lot of buyers, the stock price appreciates, uh, usually.
right, yeah, yeah.
So yeah, that's yeah. And what it could depend on is, yeah, different crises, different markets, uh, market events, and yeah, a lot of factors, I would say.
Yeah, I looked this up like on Investopedia. On like they were trying to kind of explain why stocks fluctuate. So I just grabbed three reasons.
Hmm.
Uh, yeah, as an explanation or like yeah, the main factors weighing in on like yeah, the stock fluctuation. And yeah, so unfortunately, there's no clean equation that tells us exactly how the price of a stock will behave. That said, we know a few things about the forces that move a stock up and down. These forces fall into three categories. And so, first category is fundamental factors. So, fundamental analysis, which measures a security's intrinsic value. Do you know what intrinsic value is? I knew what it was. Yeah, but I forgot.
I will check it out right now because
Oh,
I don't want to say something and then it's completely off. So I think,
okay. So yeah, um, so fundamental factors. So fundamental analysis measures a security's intrinsic value by examining related economic and financial factors. So I'm guessing some sort of valuation of the company, no?
Yeah, I would say intrinsic value, according to Investopedia again, is a measure of what an asset is worth.
Right, right, yeah.
So yeah, it's what it is actually worth, ish. Yeah.
Yeah. And I assume kind of by that concept, I think you could like determine with like other metrics, I assume,
Yeah.
if the stock is underpriced or overpriced, right? And I'm showing the
Yeah.
wrong way with my hands, but yeah. Uh, I think
Yeah.
I've heard it somewhere that that is the case, but maybe yeah. Do you agree?
Yeah. Oh, yeah. I would say something similar. Yeah.
Okay. And the third factor is technical factors. So technical analysis is a trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistic. Okay, by analyzing statistical trends gathered from trading activity, such as price movement and volume, which is like yeah more advanced stuff. I assume, but
What
like
did you call this?
um technical factors,
Okay.
which is
Yeah.
like I assume more complex metrics, but I'm not sure how that causes a stock to fluctuate.
I think
Also,
it would. Yeah.
yeah.
I think, yeah, as you said, it's more statistics over what has happened over time, right? Did you say something similar or?
Okay, yeah. Yeah. Well, it didn't really mention like prehistoric,
Oh, okay.
like yeah.
No, but you said like historical, like historic.
No, I didn't.
Okay.
It was like basically like a definition of technical factors. So I can read it again, and maybe
Yeah.
we can make some sense out of it. So technical factors. Technical analysis is a trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistical trends gathered from trading activity, such as price movement and volume.
Okay. Yeah. So I would almost interpret it as there is like some statistical uh, sort of analysis which is made based on like historical fluctuations, right? Right. And yeah,
Yeah, yeah,
you're
yeah.
using that as a sort of not benchmark, but as a sort of
Indicator.
guideline.
Yeah,
Yeah.
right, right. And the third, which makes the most sense to me as a like as a cause that would cause a stock to fluctuate in value is market sentiment. So a market sentiment is an example of crowd psychology. Optimism or pessimism grows and spreads as many market participants respond to the latest news, rumors, or projections.
Mm.
So I can see how that would like cause investors to sell and buy stock, right?
Yeah.
Which would cause the stocks to fluctuate.
Yeah.
So that makes the most sense to me out of the three factors. Yeah,
And it feels like that's the one that is mostly considered by, individual investors that are not actually professional,
yeah,
but just looking at different companies and see how they have been like affected by different events in the society and make investments based on that.
right, right, right.
Uh, so yeah.
Which can lead to this group mentality almost, and how
Yeah.
you You aren't, yeah. All right, all
Yeah.
right. Interesting. Okay, okay. But I think isn't if we try to like kind of boil it down, isn't the stock uh fluctuation, let's call it, basically dependent on how the company's service and product is kind of performing in this damn, I forgot the most basic concept.
Performing in the market or like
No, no,
just
no, no.
performing.
Demand and
Oh, supply and demand. Yeah.
demand, the dynamic, like
Yeah.
how their product and service like kind of yeah thrives in that.
No, no, no. Yeah, I completely agree with you, and I think that's one fundamental thing in the entire economy, right? For the supply and demand.
Yeah,
And obviously, like if the company will have low demand, then it won't make as many sales as it used to.
yeah,
Or for example, if the demand of its products or yeah, let's say you have a coffee shop and you have a certain demand, it works fine. But then if someone finds like, I don't know, hair in your coffee or in your bakery or in your food or whatever you're selling in that coffee shop, yeah, then it will probably hurt your reputation and it will sort of uh, lower the demand, right?
yeah,
Yeah, for your specific coffee or
yeah.
like bakery or whatever.
hmm
Yeah.
And which like later on will result in investors like maybe even losing faith in your
Yeah.
company if it's like
Yeah.
something major that has come out in the news or something. Yeah.
Yeah,
So
that's crazy. That's also a good point to, you know, how important the reputation is in today's world, especially with social media and all kind of, channels where you can share different opinions and thoughts about different companies. Uh,
yeah,
yeah, yeah. The word of mouth is powerful.
yeah, it's the
Mm.
best sort of advertising, right?
Yeah, and I think Jeff Bezos also said that. Yeah.
Yeah, I think I've heard it plenty of times on the Founders podcast.
Yeah.
I think even on the Estee Lauder episode, which we have to do a podcast on as well. But yeah,
Yeah.
uh, yeah. Okay, okay, cool. So now we have covered kind of what stocks are. Yeah, kind of discussed what causes stocks to go up and down in value, right? Yeah. So where do you want to take it from here?
Yeah, shall we go to how you buy a stock? How do you buy it? Where can you buy it?
Cool. Yeah. Let's jump into yeah.
Do you have any notes on that? Or shall we just, yeah? Because
Uh,
I think we could discuss from, yeah, go ahead.
no, no, no. We can discuss what?
No, 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 go ahead if you have any notes.
Okay, you said how you can buy a stock, right?
Yeah, how or where do you buy a stock?
Right. Well, on a stock exchange, right?
Yeah.
And I have like some sort of notes or like a small paragraph on that. So, what a stock exchange is, which we kind of even talked about before we recorded, uh, re started to record.
Mhm.
Um, so a stock exchange is a marketplace for the buying and selling of shares, bonds, and securities. Stock exchanges can serve as a means for the health of the national economy and can also be a key indicator of world economic strength. This is because the growth of the financial market equates to higher standards of living and employment rates. Yeah, kind of took like a really broad scope
Yeah.
perspective there, but yeah, basically it's a place where you buy buy stock. But yeah, I think we should make it like more tangible to understand. So before we started to record, we kind of got into this back and forth of what it really was, because I read it somewhere that the stock exchange is basically a investment company, and when you buy a stock, you basically send your money to the investment company, which then invests the money in the chosen stock that you have chosen for you, right?
Hmm. Hmm.
If I have sort of understood it somewhat correct.
Yeah. Yeah, I would agree on that. Yeah.
Okay. So, yeah.
But there are different ways of buying it too. It's like,
Okay.
right, so we discussed this before we started recording, and this was, investing through banks and different other platforms. Um, like, yeah, we have all kind of platforms where you could just, create an account, uh, put in some money, and then you're basically buying stocks.
Yeah, but like, what is that platform? Like, it seems there again, it kind of comes the abstract thing for me. Like, I don't
Yeah.
really get what the platform is. Why does it have the authority to sell other companies' stock, or like how, like, I don't know.
I think the thing is that when the company is going public,
Yeah,
they will need somewhere to sell their stocks, right? And that's when they're listing it on the stock exchange,
right.
if I have understood it correctly.
Well,
Uh,
yeah. So they kind of go through this process, IPO process. Wait, I have actually some notes on it. So how companies get their stock onto the stock market. So IPO. Companies typically begin to issue shares in their stock through a process called the initial public offering, or IPO. So initial public offering, IPO. And let's see. So IPO and then an initial public offering refers to the process of offering shares of a private corporation to the public in a new stock uh, issuance for the first time. Yeah, so it's like a introduction process, right? To uh, kind of publish. I don't know if that's the right word, but like, yeah, sell their stocks on the stock market for the first time. Let's see if I have something. Initial public offering is one of the methods that companies can use to go public. So there are other methods as well. If this is one of the methods that companies can use to go public, that's interesting. Which will make its stock available to retail traders. The company will decide how many shares it wants to offer, and an investment bank will suggest an initial price for the shares based on the predicted demand for them. So the whole process basically goes through a or an investment bank, right?
Yeah. Yeah.
So I don't know. Right now, I kind of see as platforms that maybe like you aren't really associating with the official investments. I don't know, companies or banks or whatever you call it. Like we have in Sweden, Avanza, or I don't know, eToro was also
I
like
think
this hot,
yeah, I think that's all over the world actually. Yeah.
yeah, and aren't they also like,
They are sort of a like it feels like eToro. I'm not sure about it, whether if it's a I think that's more like a platform where you could also trade Bitcoin and other cryptocurrencies. So that would be more. Meanwhile, Avanza is more of a bank as well, uh, and stock brokerage, if you want to call it that way, where you could buy um, stocks and shares and funds and so on. But you can't buy cryptocurrency there. Um, but Avanza is more like a bank as well.
right, 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 right.
So it feels like eToro is more like a platform which helps you. So you basically buy on the stock exchange through them, and then you could also buy through different banks.
Right. I don't know. It still seems to me that like even like yeah, a platform like eToro, which is considered a platform and even called a platform, it's still like kind of tied to a investment bank. It feels like I can't really see how that wouldn't be the case
Yeah. Well,
at the moment.
yeah. eToro is a social trading and multi-assets investment company that focuses on providing financial services. Yeah. So they are actually a financial service company.
Exactly.
Yeah.
So it feels like every stock exchange is basically that. Because I don't see how otherwise they would get access to like other company shares like
Yeah.
that at the moment at least.
Yeah. Yeah. Exactly. Yeah.
Uh, huh?
No, nothing. Nothing.
But, so yeah, yeah, yeah. Okay, okay. So do you have anything more to add on that? Like how? Wait, what was your question? Like how you buy stock, right?
Yeah. Exactly. How an individual can buy stock.
Yeah, yeah,
Yeah.
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 So okay, so we have a good like really yeah, in our own special way gone through the process of kind of going through how a company gets its share on the stock market, right? Or the stock exchange, which is
Yeah.
based investment company as far as we have concluded so far. Um, yeah. Would you like to get into like the dynamic of buying and selling?
Yeah.
Which are
Yeah,
like,
I was just thinking about the whole thing, how we managed to explain it, and if it was, or if it, yeah, or if it was way too sort of in the blue eventually. But let us just conclude it first. So you would
okay,
agree that, yeah. So you would agree that when a company chooses to go public, they do it on the stock exchange, right? Which is where everything, like all of the stocks, are traded.
Actually, it's good that you went back to it because
Yeah.
yeah, I still have some things I want to say.
Yeah. Okay.
Okay,
So I would conclude it like this.
okay,
Um, so I will conclude and yeah, let me know if you have any other ideas or maybe if I'm wrong on some point. But I would conclude it like yeah, so the companies are when they choose to go public, they are sort of starting to sell their stocks on the stock exchange market, right? And then we have different financial service suppliers, financial service companies, which offer investment services to the public.
right.
And then the public
In other
or like,
words, exchange or
sorry,
in other words, stock exchange. No,
I wouldn't say stock exchange, right?
no, because if they offer the public to buy stock, aren't they automatically like I don't know.
They're a financial service company, I would put it as. And they offer a platform or a way. They create a way for the public to make investments
Yeah, yeah,
on the stock exchange market,
yeah,
where all of the um, all of the public companies have or like trade their stocks.
right.
So that's how I would conclude it. If you
Okay,
would, yeah.
I think it makes sense. Yeah, but I
Yeah.
have like one question. Like, how does the role uh or what role does it play? Like, depending on like what country a company is
Mm.
like, registered to. Does it because I assume you can't buy every kind of stock from like whatever country in the world, right? Like, uh, I assume all there isn't like a stock exchange that has access to all the like stocks available that you can buy in the world, or how does that work? Like, do you have or no some sort of clearer, less abstract?
Well, the stock ex I think there is a stock exchange in every country.
Yeah, yeah, that's true.
So yeah. And there are then some financial service companies which can offer the possibility for you to buy stocks that are also um, related to companies from other countries. So, for example, eToro, right?
Yeah,
That company, yeah. Well, from there you can buy stocks in the U.S., Canada, um, in Europe.
yeah.
So yeah,
So your conclusion is that, or like you're saying that all the stock exchanges have the access to all the stocks available, or
I wouldn't say stock exchange. So the stock exchange is just one per country, I
but
would
like
say.
I don't think that's the case. I don't think each country has like a. I think I don't think each country has like a stock exchange like Sweden has Avanza. I think I think I think I saw
But
that
but
Norway had.
Avanza is not a stock exchange. The stock exchange market in Sweden is called yeah, the stock exchange in Sweden is called Nasdaq Sweden, I think.
Exactly, exactly. So and I think there were like a larger
Nasdaq Stockholm, sorry. Nasdaq Stockholm. Jesus.
right. But like those sort of stock. So what's the difference between a stock exchange and a platform that you can buy stocks on? Because to
So
me, it's the same thing.
yeah, that's the thing that I try to so yeah, okay, let's put it like this. So here's the customer, the individual, right?
Yeah,
The yeah.
me.
And here's yeah, you and I. And then here is the company. So the company they choose to go public,
Yeah.
and they do that on the stock exchange. So this is Nasdaq Stockholm, which is uh, for Sweden, or Nasdaq, which is in New York. I think all of them have different names. Or yeah, they do have different names. Um, and then you have different small, like you have different financial service companies, such as bank or other companies, financial service providers, which allows the public to buy through them different stocks on the stock exchange market.
But like, why do you have the platforms then? Like, wouldn't it? What like why do you have the middleman if you could just buy from the original stock exchange?
Because
Is it because the middleman provides like a more comfortable way of buying the stock, or like
I
like a,
think so, and I think also I also think that the commissions are smaller,
okay,
you know. So if
yeah,
you buy through them, it's somewhat cheaper than buying um
directly.
directly, and easier also.
Interesting. So that is where the platforms have their place.
Yeah, and I mean it's much easier to trade through a platform and just sit on your mobile
Yeah.
and like yeah, I want to buy it now and then I'm selling it like directly after. Yeah, that's really simple through platforms.
Okay. 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 So when a company wants to sell stock, it goes through this IPO process with a investment bank. Damn.
Invest. We like damn. No, no, no. Let's see. I have no idea how to.
No, but this is good. This is good. Like this is how we make sense of it all.
Yeah.
Um, and this is kind of how I imagined the episode going, to be honest. Like,
No, no, no. But I mean that's why we're doing it, to discuss it. And I'm not sure. Like it could be even more complicated than that. Um, that's just that's how we understand it. Maybe yeah. But that's at least how I understand it. So you have the firm, you have the company selling their stocks on the stock exchange market.
but like the point that I feel that you are missing, like, how did a company get on the stock exchange, though?
On the stock exchange,
Yeah, how does it get there?
yeah, by choosing to off or like by choosing to go public.
Okay, which I assume, or I'm pretty sure there are like some requirements for a company to do that. But yeah, okay, okay, okay.
Yeah, they have to follow some uh steps, and they have to be evaluated and all kind of. I think you also read it.
And that's basically the IPO process.
Yeah, the IPO, initial public offering, is
That's kind of how I see it, no?
yeah, yeah, yeah.
Right.
The process of offering shares of a private corporations to the public in a new stock issuance for the first time. Yeah.
Okay. Okay, okay, okay. So company goes through the IPO process, gets on the stock exchange, then we
There
have,
are different financial service providers,
yeah, AKA platforms, right?
or yeah, that offer, yeah, that Yeah, they do have platforms. Yeah.
that makes it easier and more comfortable for the public to invest in stocks. Okay, okay. So that's kind of how everything kind of lines up.
Yeah.
Okay, okay.
At least in my head.
In my
Uh,
head also.
yeah, good. Then we are on the same page.
Yeah, yeah, yeah.
Uh,
And if we are wrong, then we are wrong together.
yeah, exactly. And we
Cool.
discussed, right? We discussed why they choose to go public in the beginning.
Yeah, yeah,
Yeah.
yeah.
Yeah. Good. Yeah. All right.
Okay. Now we can jump to the buying and selling, right?
Yeah.
So that was also a really confusing thing to me.
Yeah.
And then I had a really intimate and long conversation with ChatGPT about this
Yeah.
whole issue, and came to a conclusion from ChatGPT. I don't know how true it is, but like my issue was like, or my yeah, my problem with the selling of stocks was how can I sell my stock if I haven't arranged a buyer, right? How does that process work? Like how can I get rid of a asset that my money is tied to without like know that somebody will buy the stock from me, if that makes sense.
Yeah. Yeah. It makes sense. Yeah. And I think I understand what your point is.
And so what I concluded with ChatGPT is that the platform basically serves as a middleman even in the buying and selling process. That when you want to sell a stock, the platform buys it from you,
Mm.
which then makes it available to other investors, right?
Yeah.
You get your yeah money from that stock that you have sold, right? Or stocks.
Yeah. Yeah.
Uh, like uh doesn't or yeah doesn't depend if it has gone up and down, you get like your yeah money back.
Yeah. Yeah. I mean, if you sell when it has gone down, then you will obviously go backwards. But yeah, you will get your money somehow.
Yeah, like yeah,
Yeah.
you get less money. Yeah, of course.
Yeah. 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 That to be honest, that's a tricky question, but I think it makes sense what you said because I was a bit unsure about it myself.
Okay.
So yeah.
So that is what I and my friend the ChatGPT concluded about this issue.
Yeah.
Yeah. Do you have like other thoughts on that?
No, I think it makes sense because they are actually working as a middleman, right? The financial service companies,
Yeah.
um, and they are there to basically, yeah, among other things, make trading easier and more comfortable for others. So yeah.
Accessible as well.
Access, yeah, that's a good one as well. And that's so interesting because it feels like here in the northern Europe, like in the Scandinavia, it feels like it's so easy and simple to trade compared to other, and it feels like there are more people aware of it um, compared to maybe other countries, which
Yeah.
is obviously dependent on other factors as well, education, blah 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 blah. But that's yeah, that's another thing. But I think that's yeah, I don't know. It has become so simple to simply it has become so simple to simply to, to simply invest and trade and just try different I don't know strategies if you have um yeah. And as Warren Buffett said, it's so easy to be rich just but there are people lacking
The patience
patience. Thank you. Yeah.
to hold on to a good investment when they have one, right?
Yeah, and then you must recognize a good investment as well, right?
Yeah.
Um, but yeah,
Yeah, I could make some comments about like now get into like what Charlie Munger said, what Warren Buffett said, but we can save it to for another episode. But okay. So now, so you kind of agree with the buying and selling process that I proposed, uh, my understanding of it.
could you repeat that because you were frozen?
Oh shit, like Elsa.
Yeah,
Uh,
it's my internet connection that is bad.
okay, no, but I was basically just kind of wanting to conclude that this buying and selling
Hmm?
we are having here,
Yeah,
uh, yeah, you would basically agree like with my proposition or proposition, my idea of like how the selling and the buying works of a stock, right?
yeah,
It's like, yeah,
yeah, and I think we have managed to conclude it pretty well on how it goes from both ends, right? So both from how the company itself goes public,
yeah,
and then how and all the way to how the individual is buying and selling stocks.
right, yeah, yeah,
Uh, and I,
exactly.
I hope I hope we managed to do it pretty simple.
I don't think so, to be honest, but if you want to, we can try to conclude it, and maybe
Sure.
even yeah, we can release it as a shorter clip, like
Okay. Yeah. Okay. So
maybe.
let's make a conclusion. Yeah, that's a good one.
So we can start from the beginning, like where we started, and just do like a small recap, and then we just can wrap up the episode, right? I
Yeah.
think then we can
Sounds
get
good.
get into like more specifics on the future episodes on like
Yeah.
metrics which we didn't even cover, which we kind of have had planned to cover, but maybe we can just do a separate episode on metrics or something like that.
Yeah. Yeah. I think it's also easier to when you look at different metrics. I think it's also easier to have a company that you're looking at.
Yeah,
Uh, just to look, just to give examples of different numbers and what you should look at, and yeah, and
yeah,
so on. So yeah, that would be easier to explain. But good that you mention it. I mean, there are different metrics. There are different metrics that are good to understand or at least be aware of, and different benchmarks, or how would God, yeah, benchmarks that
yeah, or like reference values. I don't know. Yeah, yeah.
yeah.
We can explain that in the future episode.
Yeah, yeah, good. Okay, so let's wrap this up then, right?
Let's wrap this thing up. Yeah.
Yeah. Okay. So
I
from the beginning,
was thinking about the same thing.
the
Meaning, yeah.
beginning.
Shit.
Okay,
Uh,
good.
yeah. Okay, so what is a stock? Let's just start there, right?
Okay, yeah, that's a part. That's a share of a company, of the equity of a company, or just a company. Yeah, to put it simple.
Yeah, exactly, exactly.
Okay, and then what was the other one that we went through? We have discussed so many points. Yeah, or maybe it's just me. I don't know.
No, it's me too.
Okay, yeah. Okay, so what is a stock? We have just defined it. So, Emils, why do companies want to sell stock, or why do they go public?
Perfect. So, companies go public to raise money, basically,
Mm,
to enhance their production, to yeah, maybe to create a new product.
yeah,
What more? I had it here actually. A pretty good sum, like
yeah, yeah. To expand, to develop, like to
yeah,
invest in research and development,
yeah, or
uh,
to pay off that, right?
all that. Yeah, that's a good one as well. Yeah. Okay, and then we have the question: how are they getting on, or how do they become tradable?
Yeah, well, how stocks get on the stock exchange.
Yes.
basically. So they can go through this process called IPO, right? So what was it again?
Initial public offering,
Thank you.
I believe. Yeah.
Which basically is, at least what we have concluded, is that when a company wants to get its share or stock on the stock exchange for, yeah, make the stock available to the public, it goes through a investment bank or some sort of financial institution company, right? That provides some sort of financial services. And through that institution, you can just correct me if I'm missing something. And through that company or institution, I don't know if institution is the right word, but like company, like an investment bank. The investment bank then makes the stock available and has some sort of platform, right?
The stock exchange. I think you forgot the stock exchange.
Right. So
From the beginning.
from the beginning,
Beginning.
uh, yeah, maybe you can take it.
Okay. Okay. So briefly. So how are they? Yeah, as you mentioned, so the company chooses to go public and then they go through the IPO process, right?
Yeah,
And yeah, before it goes public, it needs to go through different processes. And yeah, they have to be evaluated and so on and so on. Just to make sure everything is as correct as possible or as accurate as possible. Anyway, when that process is done, it is then available, or it is traded on the stock exchange market, which is sort of, yeah, there's one per country, if I'm not mistaken. Um, and from there are different financial service companies, such as banks and other companies that offer um, the public to buy stocks through them to a more affordable and comfortable process.
perfect. Yeah.
Does it make sense?
Yep,
Yeah. Okay. So that's how we kind of understood. Yeah.
exactly.
Yeah.
So what are stocks, how they get on the stock exchange, and other platforms.
Yeah.
Okay, so how do stocks drop and increase in value?
Yeah. And that's how we also concluded very briefly that it's dependent on different prices and different market events and public
Perception,
perception. Yeah, that's a good word.
yeah, of
Um,
company, right, and how well also the basis of it all, how well the company's service or product performs on the
yeah.
free market.
Yeah.
Yeah. So that's
Yes.
basically that. Are you looking up something or
Yeah. I was just trying to look something
what? What is it?
about the stock exchanges because I was a bit unsure. Uh, yeah. So in the US, there are like several stock exchanges. So we have New York Stock Exchange, NYSE, USA. What is this? Oh, yeah. It feels like there is one per country because I just found an article where it says like the 10 largest stock exchanges in the world, and here it says New York Stock Exchange in the US. And then we have National Associations of Securities Dealers Automated Quotations, NASDAQ, USA. Oh,
Okay.
NASDAQ. Yeah, this one is in Sweden as well, NASDAQ, right? NASDAQ Stockholm. And then we have Shanghai Stock Exchange, SSE, European Exchange Technology, Euronext, Europe. Um, and Euronext is the multi-state stock exchange, which is located in Amsterdam, Netherlands. And it operates exchanges in Amsterdam, London, Paris, Lisbon, Brussels, Dublin, Milan, and Oslo. So basically, in Europe, there is one that is including several others from different countries.
I think there are more than one in Europe actually, because there was some kind of a Nordic. I
Oh, there
think,
is one for the Nordic as well, Nordic
yeah, I
countries.
think so. Yeah, like which also includes the Baltic countries.
Hmm. Okay.
I think I saw something like that. So I think there are several in Europe as well.
Okay, that's interesting. Yeah. And then I found like Bombay Stock Exchange. This is in India, Toronto in Canada, London, Shenzhen Stock Exchange, China.
So it's
Yeah.
like it isn't really.
It feels like it is one per country in most of the cases, right?
I'm not
Yeah.
sure about that, but like at least yeah, it's like varies because like in US we have a multiple.
Yeah, in US we've got NASDAQ and NYSE.
And I would even argue because you're looking up the biggest, right? It isn't like necessarily
Yeah,
like
these ones are the biggest, yeah. But I
exactly
think that if you look at the individual country, there is only one. And then you could perhaps have a bunch of others gathered in one as a whole for like an entire region as it was for the European.
right. That actually makes more sense. Yeah.
Yeah. Yeah.
Because the smaller stock exchanges that maybe are in each country
Yeah.
maybe have like a better outlook on what companies there are like in that specific country, right? Which
Mm.
then can provide information to a more centralized stock exchange, right? That covers
Yeah.
like a bigger region.
Yeah, because the European includes, for example, Paris. So the European, the big one, includes the exchange from France, uh, Portugal, Belgium, and so on.
Right.
And then, like, if a company from France wants to go public, then they go through the Paris Stock Exchange,
Yeah.
which is then sort of connected to the bigger one, which is the European.
Boom. Okay.
Okay, so we okay, good. So that
I don't
okay,
think this will be a short clip, but
nope, I don't think so either. But at least we are figuring something out here.
yeah. I'm making progress. And
Yeah,
that's the main main objective here
yeah,
to learn
uh,
more stuff about investing. So yeah.
exactly. Good. So then we have that. And what was the next thing? How?
Uh, well, so now we kind of have. I brought up the volatility, the
Mhm.
fluctuation of the stocks, right? Why
Yes.
they go up and down. Did we cover that?
I think we discussed why it goes up and down, right? And that what we
Uh,
mentioned that is the public perception and so on.
yeah. Right. Okay. Buying, selling. Are we there? I think we are, right?
Yeah, I think we discussed it, right?
I don't think we brought up the buying and selling actually in this summarized in this recap.
Okay.
I don't think we have
So how would you then? Okay.
huh?
So how about buying and selling then?
Oh my gosh, you're talking like a robot. Uh, what was your
Is it
question?
my internet?
I don't know.
Is it my
Maybe it's mine.
Okay. Yeah. Okay.
Can you
Uh,
just repeat your question a third time?
yes. So how about buying and selling then? How
Yeah,
about
yeah.
buying and selling? Yeah.
Uh, so basically, what I have concluded with ChatGPT and now maybe even with Costin is
Yeah.
that when you let's just start with the selling and not even with the buying, or maybe we can go with the buying and just buy a stock, right? Uh, doesn't yeah hasn't have any major like big or more complexity to it. But when you sell a stock, which is the part where I got confused or like prior in my life, uh, is that like, yeah, when you want to sell a stock, and I was wondering like, who will buy the stock from me? Like, yeah, we talked about that. And so basically what we concluded is that the platform has like this some sort of, I don't know, algorithm or whatever it is. And it kind of works like as this middleman that will buy the stock from you when you decide to sell it. So there doesn't have to be a real life person that will buy the stock from you, right? It will just buy the stock. The platform will buy the stock from you and just give the money you have earned, right?
Yes.
And make it available to the other investors.
Exactement.
Something like that.
Yeah. No, I think that's a good conclusion.
I think
Yeah.
I think I did it better earlier, but yeah, whatever.
I mean, it's good. It's good. Yeah. Yeah.
Yeah,
It's
yeah, whatever,
yeah.
whatever.
Yeah.
It's
And that's the that's all we had, right?
yeah, I think so.
That's yeah. Yeah, we went through it kind of.
It was rough at times.
I mean, we could have explained everything like we did in the wrap up, right? But I guess it was better to just break it down.
Yeah, and I think we even like discovered some things along the way, like with the
Yeah,
like stock exchanges.
yeah, we did it live, so
Hey,
yeah,
so yeah, yeah,
good.
good. Yeah, yeah, yeah. Are we just gonna end it here?
Yeah, sadly.
Okay. All right, guys. Hey, thank you for listening to another episode, the first episode of the investment season, right? Yeah, thank you for listening to us. Yeah, making our way through what stocks are, right? Hope it didn't get too fuzzy. I probably did, but yeah, we hope that you was with us. Yeah, yeah, yeah. We hope that you enjoyed this episode and that this will help you navigate life's spin.
Exactly. And if you have anything else to add to our episode, or maybe you own any stocks that has performed or have performed well over time, don't hesitate to write down below and yeah, subscribe to our channel so you can get the updates about the investment quarter and much more to come. So until next time, right?
Till next time.
Adios.